Welcome back to the Wall Street Podcast.
Glad to be here.
Today, we're doing a deep dive into the Wall Street Journal. We're looking at the Thursday, August 21st, 2025 edition.
That's right. We'll be pulling out the key headlines, market movers, corporate news, policy shifts, really distilling what matters for you.
The front page gives us quite a mix. We've got economic policy, some major corporate stories, market performance.
We'll definitely unpack the Federal Reserve's position, some important earnings reports and strategic moves, and also touch on U.S. trade policy, which seems to be constantly evolving.
Okay, let's start with the Fed then. There's this report that President Trump is considering firing Fed Governor Lisa Cook over mortgage fraud accusations.
Yes, that's the headline. And it comes, interestingly, after the Fed's July decision to hold rates steady received broad support, though there were those two dissents calling for a cut.
And Powell's term is up in May 2026. All this is happening under, well, considerable White House pressure to cut rates.
Precisely. This potential move against Governor Cook, setting aside the specifics of the claim for a moment, is really seen as an escalation, a direct challenge perhaps to the Fed's independence.
Especially with another governor having resigned recently.
Exactly. It creates this atmosphere of pressure. So all eyes are on Powell's Jackson Hole speech now. Traders are looking for any signal, any hint about future rate direction and how the Fed might navigate this political environment.
Okay, shifting gears from the Fed to the corporate world. Target. Their shares fell. Whoa, is it over 6%?
6.3%, yes. That followed the appointment of an insider, Michael Fiddelke, as the new CEO.
And this comes after, I think, 11 quarters of flat or falling sales. Comparable sales down again, 1.9% last quarter.
It does raise that question, doesn't it? When a company's in a slump like this, can an insider, someone who's been part of the existing structure, really drive the needed change?
Or do you need that outside perspective?
Investors seem skeptical. That's clear from the stock reaction. Fiddelke has challenges. The sales slump, perceptions of high prices, maybe even store experience issues.
His predecessor, Brian Cornell, he was an outsider, right? And he navigated some tough times, the data breach, the Canada exit.
He did. The challenge now, people say, is bringing back some of that Target magic, the fashion-forward element that maybe got diluted post-pandemic. That's often seen as a task easier for someone coming in fresh.
Interesting contrast. Elsewhere in retail and food, McDonald's is cutting combo meal prices.
That's a direct response to consumer complaints. Some Big Mac meals hitting $18. That got a lot of attention. The new prices start early September.
Then you have Lowe's doing well. Q2 sales growth raised their outlook, and they're buying foundation building materials for nearly $9 billion.
A sign of strength there. But on the flip side, Estée Lauder reported wider losses, a pretty grim outlook, and they're specifically calling out a $100 million hit from tariffs.
Which brings us to industry shifts and policy. Scotts Miracle-Gro is pulling back on its cannabis line, Hawthorne. The green rush seems to be fading.
It seems so. The core problem is that cannabis is still Schedule I federally. That creates huge hurdles, banking issues, no interstate commerce, punitive tax rules, wholesale prices have dropped, margins are thin. It's just very hard to operate profitably at scale.
Okay, and that links back to trade policy, too. These promised tariff reliefs for allies, Japan, South Korea on autos, the UK on steel, they haven't fully materialized, have they?
No, despite bilateral agreements being announced. Toyota, for example, estimates the current auto tariffs will cost them about $9.5 billion in operating profit this year alone. That's a staggering number.
So let's unpack that a bit. What are the real-world impacts of these, let's call them handshake deals in trade, when the implementation doesn't match the announcement?
Well, the preference for, shall we say, bold pronouncements over detailed, legally finalized texts creates enormous uncertainty. Businesses operate on predictability.
Right.
When you have an agreement announced, say, to reduce tariffs from 25% to 15% on Japanese autos, but the 25% levy stays in place, well, companies can't plan effectively.
And you get these huge financial hits, like the Toyota example.
Exactly. It highlights the instability. Companies involved in global trade are constantly adjusting to a landscape where policy can be quite volatile, and announced changes don't always mean immediate changes on the ground.
So tying this all together for our listeners, how does this affect you day to day?
Well, some effects are very direct. McDonald's lowering prices because you, the consumer, pushed back. Target struggling with perception of high prices influences where you might choose to shop.
And the trade uncertainty.
That can be less visible initially, but persistent tariffs or trade friction can eventually mean higher costs for imported goods. That could filter down to the prices you pay for electronics, cars, even some groceries. It's all interconnected.
So this dive really shows that complex interplay, doesn't it? between policy decisions in Washington, corporate strategies on Wall Street, and ultimately consumer behavior and your wallet.
Absolutely. We tried to connect those dots today, pulling out the key insights to keep you informed.
And maybe a final thought to leave you with. As we see increasing political pressure, particularly on institutions designed to be independent, like the Fed, how might that reshaping affect the fundamental stability of our economic framework in the years ahead? Something to consider.